Good day, everybody. Welcome to a presentation by Westbridge Energy. I'll start by saying that Westbridge Energy is a Canadian company. We are listed on the TSX Venture Exchange under the ticker symbol WEB. We are a company that currently has assets in Namibia. We've acquired assets over the past 18 months, and we are currently having a joint venture with a company out of Houston, Texas, by the name of Black Pearl Energy. We'll talk about that going forward. And then we'll get into the presentation. So thank you very much for your attention. Go to the next slide, slide number 1. Like I mentioned, Westbridge is a company that currently has 5 blocks offshore Namibia. We'll get into that in another half of the presentation. But we're going to focus initially on the fact we are building and growing our company going forward by diversifying our portfolio into the very exciting and very active U.S. onshore play in Texas and Louisiana with 3 projects through our joint venture with Black Pearl. So ultimately, upon closing of the transaction that we're currently doing with Black Pearl, which is through a private placement, we will be earning our way into projects in the United States, as well as also continuing our projects in Namibia, to trying to farm down our interest in Namibia to continue the program there. The joint venture with Black Pearl provides Westbridge with a number of significant transaction catalysts. The first is a combination of the 2 companies, which allows for diversification of our portfolio and allows us to become a company that not only has access to exploration assets, but also access to immediate and near-term production assets, which is extremely important for balancing our portfolio and building our treasury and our cash position. Secondly, we enter into a country, the United States, with the joint venture with Black Pearl, that allows us to go into a country that is geopolitically stable, that has the low cost of entry, that has low cost of operations with respect to the well costs compared to Namibia, and also has a significant amount of infrastructure available in country. Number 3, the joint venture with Black Pearl complements the skills of Westbridge by providing us with a significant technical experience and execution capability in the form of 150 years of experience by Black Pearl's team. Number 4, and the most important thing, is it allows us to get access to a significant database of seismic data, which is licensed from ExxonMobil, which Black Pearl owns, and also access to over 500 drill-ready leads and prospects in the trend over the 2 seismic area, which covers 7 states, and I'll get into that in the next slide. It also provides access to 58 leads and drilling targets in a 3D area in Lavaca County in Texas. So very, very attractive and very, very transformational catalyst for the venture of Black Pearl. Next slide, number 3, talks about the fact that the U.S. is now the dollar of the world. The U.S. is now the #1 liquids producer in the world. The 2 shale oil products in the United States, which is the Bakken in North Dakota and Montana, and also the Eagle Ford in Texas. The U.S. is producing almost 2.5 million barrels from these 2 projects, and this has pushed the U.S. to become ultimately the #1 oil producer in the world by 2014-2015, surpassing Saudi Arabia and Russia. This has acquired a lot of focus from U.S. companies like Apache, Anadarko, and other people who have been reorganizing the portfolio and acquiring significant U.S. assets. Ultimately, the markets have rewarded these companies, as you can see from the one-year performance of, for example, Manhattan over there in the lower left-hand corner of the slide. So the U.S. is a very attractive region, creating significant value for shareholder companies that are doing operations or continuing to access deals and assets in the United States. So the next slide shows, slide number 4, shows the terms of the joint venture which we will be having with Black Pearl. So we are earning our way into 3 very exciting projects, of which 2 of these projects are proven oil fields. One of them is currently producing, the Bivens field, and the Wharton County field is a proven non-producing asset. And then we have the Lavaca County project, which is a project that will provide significant growth and upside to the company in the short term, which is between 1 to 2 years time frame. Additionally, we will have options to 50% of any projects that are generated from the 2D ExxonMobil seismic data package that we have through our joint venture with BlackPearl. We'll also be gaining Mike Lee, the CEO of BlackPearl, to join the board of Westbridge to align ourselves with BlackPearl. And then also we'll be helping to support BlackPearl for the first 3 months in the G&A costs going forward, which will be recovered from the production of the workovers on the Bivens field and the Wharton County field. Subsequently to this joint venture, we've also announced that we will be merging. We have an option to merge with BlackPearl to create one company. We have, upon the closure of the transaction, we will have 180 days to merge with BlackPearl, and therefore BlackPearl Westbridge will become one company, and therefore our interests will be completely aligned, and we will therefore own a significant portion of all these assets. We will own 56% of the Bivens field at that time. We will own 75% of the Wharton County project and 100% of the Lavaca play at that time. So very exciting and very attractive for the company. The next slide, slide number 5, it talks about our capital program and shows how we'll be using capital over the next 10 months, basically to create significant value. So for a $9 million spend, we will ultimately, at the end of summer, hope to have or plan to have about 1,500 barrels of gross production to the projects, of which net to Westbridge will be about 600 to 650 barrels of production and about 4 to 5 million barrels of reserves net to Westbridge. So a significant increase in production and reserves to the company from where we are today, for a spend of about $9 million. So very, very attractive. These are high-value projects with high IRRs and very attractive production terms. Next slide, number 4, begins to talk about the fact that shows our partners in BlackPearl, shows the experience of Mike Looney. He's a geologist with 30 years of experience, who's been operating in this part of the world for a significant period of his career. He's worked for Exxon and Hunt and a number of people in his career. And his team, if the next slide will show, has 150 years of experience, which will ultimately be adding value to Westbridge, to the venture, but ultimately when we merge, we will be creating a significant management team, as you can see here, with a significant amount of technical and execution capability in this play trend. So very important for the company going forward. Next slide really gets into talks about the ExxonMobil 2D, and this is a significant intangible asset to the company, and it will provide us with a significant ability to create many new drill-ready prospects and trends. And so we will use this technology and this intellectual property to create the next play trends in the southern part of the United States, and also ultimately have access to everything else in the United States with ExxonMobil data, except for California and Alaska. So the joint venture of BlackPearl will give us access to the rest of the United States, the 2D and 3D of ExxonMobil, excluding California and Alaska. We'll have the license to that data as well. So very strategic in this intellectual property. Next slide. Just to go into the U.S. assets, and I'll start with the first asset, which is the Bivens field. The Bivens field is located in southeastern Louisiana, and it is a field that was discovered in the late 2000s, about 2010, by 2 wells. The first well, the Olympian number 1 well. And you can see the Bivens field sitting there in the red. Initially, this field was identified by BlackPearl by using the Neil field as a significant analogy, and the geologists at BlackPearl postulated that the reservoirs at Neil field will be present 8 miles to the south from Bivens, and lo and behold, they found the same reservoirs and more. And we'll talk about that in the next slide coming up here. Also to mention is that there's a significant amount of production from this area by companies like Mid-States and El Paso, as you can see in the lower part of the diagram. Mid-States is producing above 12,000 barrels a day of production here, and is focusing a significant amount of their capital program in this area. We also know that big companies like Swift Energy and Devon Energy are significantly involved in this area as well. This has become a new play trend with these low Wilcox type sands out here. And we plan to make this a significant piece of our portfolio going forward. I'm very excited about this. There are currently 2 producing sands in this field. And we'll go to the next slide. The Bivens field. The next slide shows the Bivens field. It shows the Neil field well log as an analogy. And you can see that the Neil field, which is currently no more producing, but it was found in the 1930s and produced for almost 40 years. Produced over 20 million barrels of oil from this small field. At the Neil field, as you can see, they had about 10 reservoirs in the Neil field. And we were then able to identify through our joint venture Black Pearl identified the same 10 reservoirs and more in the Bivens field. We go to the next slide. Yeah. You can see that the Olympia Minerals #1 well, which is the discovery well in this field, found 9 pay sands with 3 additional possible pay sands. So a total of 12 pay sands in this field so far identified by this one well. Currently, this well is producing from only one of these reservoirs, and we plan to go in there, as we saw in the diagram we had earlier, and rework this sand to increase the production by we hope over 300%. The capital we are raising right now. The next slide is the second well. That one's drilled and found 2 additional sands, as you can see on the left there, and that's the well log you're seeing there, with the gamma ray in the green and the resistivity in red. So the 2 additional sands were added, and now you have 14 sands. And so if you go to the next slide, you can see the relationship between the #1 well on the next slide and the 2 well. So #1, we have the Olympia Minerals #1 well, which is the original well that discovered the field. And the second slide is the #2 well, which is drilled up dip of this 3-way structural closure, and the identification of new additional sands in the upper section there. And so we plan to drill a deeper well on the next slide on the same field, which will identify an additional 3 to 4 sands in the deeper section in this field, which was not gotten to by the original #1 discovery well due to mechanical problems after the drilling. The original operator was drilling, which is better. Currently, Black Pearl and Westbridge are the operators of this field. We plan to drill a deeper well in the summertime, which will target 3 additional wells, which are the reservoirs with the prolific reservoirs in this entire trend. And in the Neil field, which is our analog to the north, we showed in 3 or 4 slides ago, these 3 sands in the Neil field produce 16 million barrels out of 20 million barrels. So there's significant producers in this area going forward for us. So those 3 sands will total make the Bivens field have a total of 17 or plus potential reservoirs in this field alone. So very, very prolific field, very, very hydrocarbon rich field, and over time we plan to drill 6 to 8 wells, 6 wells after the 2, the well in the summertime and the 2 local wells to fully develop this field. We plan ultimately this field will ultimately be producing, we hope, ultimately between 2,000 to 3,000 barrels a day in this field in the next 18 to 36 months. The next slide on 16 just shows the facilities that are already on the field. So once we complete production will literally start immediately. The processing of the oil and the gas will happen in these facilities you see here, and then all will be trucked out for sale. These wells are going to cost on average between $2.5 to $5 million, and will ultimately recover between 100 to 500 barrels per well. So quite attractive, with very low decline rates of about 8% a year on year. So very attractive production profile, very attractive economics, and very attractive project. The next slide, it talks about the second project, which is a proven but not producing asset. This is the Wharton field. This is the field, as you can see. It's situated in the Salt Dome in Texas. We currently own with Black Pearl joint venture 75% of this field. This field was initially producing 236 barrels of oil a day from the initial well, but the well has mechanically failed. But we're going to go in there and drill a twin well. So go to the next slide, slide number 18. Shows the reservoir. So the bright spots you see here are the producing interval, and the original well was drilled. The middle green well was the original hole that found hydrocarbons and produced 236 barrels a day. But of course, we had mechanical problems with the previous operator. Currently, Westbridge and Black Pearl are the operators. We plan to drill a twin well, which you can see on the far right in the green well in the lower interval. About 500 feet up structurally away from the original hole, about 50 feet up dip, and 500 feet laterally away, structurally wise. The plan is, if you go to the next slide, is to load up that sand completely with hydrocarbons. So this is what was found in the original hole, which you can see on the right. The sidetrack to that hole confirmed the pay. And as we go up dip, we will basically fill up this reservoir completely. And based on the engineering work that we've done, that we should get a gross production of about 400 to 500 barrels of production a day. With net Westbridge, will be about 40 to 50% of that. So this well will cost about $1.3 million, and will recover a significant amount of hydrocarbons. And we think this field has potentially about 2 million barrels. We plan to drill another 2 wells that we think will be enough to drill into the field. So a very significant, very attractive economic project. The next slide, you're looking at 20, is the real growth story for this slide. So this is where we think we will create significant value for Westbridge over the next 1 to 3 years. And this is a misinterpreted basin play, and basically what you're looking at here is the Eagle Ford trend in Texas currently. We are targeting Wilcox sands sitting above the Eagle Ford trend. So there's infrastructure everywhere here. We own, through the joint venture of Black Pearl, this 85 square kilometer piece of seismic package you see on the top right-hand corner in red called the Lavaca 3D. And then the inner diagram, you see the trend in Texas there in red, which is the Eagle Ford trend. This trend can go for, this Wilcox trend will go for hundreds of miles to the southeast on the above the Eagle Ford trend, and also in other states. So the next slide talks about the geology. I'll explain why we think this is so attractive. What we'll be targeting are, you see there are strategic sands that are basically tracked against these canyon plays in the Wilcox. And so because of the geology, complex geology of the sands, we will be targeting these sands using 3D technology, 3D specific kinds of 3D processing, and also a lot of analog wells in the area that were drilled through producing fields in the Wilcox, but that were found by accident in the past 20 years. Some of these fields, and we'll show them coming up here, but these are the same sands we're going to be targeting in these fields, and in these prospects, against the Lavaca play. In the next slide, what you see is a 3D coherency slice over the entire area of the 3D that we, Westbridge and Black Pearl, control through our joint venture, and ultimately 100% of it through our merger. What you're looking at here in the yellow arrows are drill targets, of which we have high graded with a chance of success of over 80%. 7 of these, and with all potential reserves of about 6 to 8 million barrels, of which each of these wells could produce at a low end or a medium end between 200 to 300 barrels of production a day. Each of these wells would cost about $1.5 million to drill and complete to production, so very, very attractive. And with each of them will target between 1 million to 2.5 million barrels of reserves. So quite attractive economics, very attractive play. And like I said, we control the 3D over this area, and we own this 100% with our joint venture and our merger, ultimate merger with Black Pearl. So in this area, just the 7 of the prospects alone, and we have over 50 drill-ready targets here. The top 7 targets that are high-graded for us could hold between 10 to 15 million barrels of oil. So very attractive. Very quick to drill, low cost, shallow, above the Eagle Ford, oil play, predominantly 90% oil play, with some gas production, but predominantly oil. So very, very attractive. We have, through our joint venture backbone, have some of the leases, but we're going out to acquire the leases here over the next 12 to 12 months to secure top targets in this key target-rich area. So very small area, lots of targets, of which 7 are high-graded, and we'll be drilling 3 of them in the summertime of this year. The next slide just shows an example, get there, of the Valentine field, which you saw on the previous slide. If I go back to the previous slide, identify the Valentine's field on that 3D. The Valentine's field is a field that was found by accident, which is actually situated about 1.5 miles from our first drill target that we will drill sometime in the early part of summer of next year. But this field was found by accident by previous operators in the 70s and 80s that were targeting deeper horizons in this part of Texas. They overdrilled the field. We believe they could have produced the field with only 5 wells. But the field ultimately produced, as you can see here, about 1.5 million barrels of oil. And so with only 4 wells at $1.5 million per well, that's about $6 million spend. And that ultimately would produce 1.5 million barrels. This is a significant production for a low-cost amount of work and capex. So quite attractive economics from a project like this. And as I mentioned, we will be drilling our first target here next to this field in summertime. This just shows another analog and a cross-section of what the Valentine's field is. You can see the trapping mechanism of these canyon systems with the sand trapped against them. So it's a very unique geology, but very, very complicated geology, which requires the 3D seismic and a lot of well logs to be able to understand this trend, to identify the targets, which we, through our joint venture with Black Pearl has spent significant amount of capital and time to identify these 50 drill-ready targets, of which we did high-graded 7, and which we'll be drilling with them 3 next year. So next slide shows another example of the Valentine's field, and basically a well log and also the cumulative production from this well. This just from one of the 3 sands in Valentine's field. As you can see here, was producing 132 barrels of oil a day, about 220,000 cubic feet a day of production. Ultimately, produced about 150,000 barrels a day from this one sand, about 200 million cubic feet. So quite attractive just from that one sand. The next slide, which is a strategically important slide, shows the attractiveness of this and why we think this is going to be a significant trend. This is a seismic line over the canyon and runs over the produced Valentine field as our analog. And what it shows is numerous drill targets, 4 of the drill targets out of the 50 drill targets in just that small 85 square mile area. So we have a lot of drill targets, and you can see here Henry Island, which is sitting right next to Valentine's field, up dip, which is perfect from a migration of hydrocarbon standpoint. This is our first target that we're going to drill. Henry Island is literally 1.5 miles to 2 miles from Valentine's field. So infrastructure is in place. The well will cost $1.5 million to drill. We plan to drill Henry Island sometime between April and May of this year and put it on stream. So we're very excited. And then we'll go back and we have 3 other wells to drill. One of them may be Stalking Island with the wood drill, but we haven't decided yet. But for sure, we're going to drill Henry Island first and begin to open up this new trend. And this trend will continue over basically hundreds of miles to the southeast along the same Texas trend and into other states too. Now we have a significant competitive advantage over most of our competitors because of our geologic understanding and our ability to go out and release these targets or these prospects over the next 8 to 12 months. So we're very excited about this. And this slide here shows the potential of just one of these lines, and only 3 to 4 of these targets. We've got 50 just in this 85 square mile alone, which we own 100% of it post-merger with Blackwell. So very, very attractive, very exciting. And that ends our talk about the U.S. We're going to go into our talk about Namibia now. And Namibia is as most of our investor base knows, is a really attractive part of the world with significant activity by super majors and independents alike. As we know, there's been a lot of activity in the recent past with farmers like Petrobras and BP and Repsol, and of course Tullow farming in literally 2.5 months ago in the area just about 100 kilometers southwest of our blocks in the Walvis Basin. The Walvis Basin is the oil basin proven by the well, the HRT drilled recently, the Ringat well, which is a technical discovery that recovered oil from their acreage in that basin. And of course, if you go to the next slide, you'll see here, before you go to the next slide, up here you'll see Westbridge's acreage in yellow up here, the red circle. And basically, the play here is that we are a mirror image to the Brazilian and northern Uruguayan basins. And so, as we know in the Santos Basin, there's been significant discoveries, and the concept here is that before the opening on separation of Africa and South America, the basins were mirrored, and so basically it's the same type of geology is what is expected and being seen on the other side in Namibia. So, very, very prospective area just from that alone. In Brazil, so far, they found about 20 billion barrels in numerous pre-salt targets, such as the Jupiter field, and of course the very famous Tupi, or what is now called the Lula discovery. The next slide shows the significant regional activity that's occurred in the past just 2.5 to 3 years. So of course, we're familiar with the 3 basins. The southern basin is the orange basin, as you can see in the south with the green assets. The middle basin is the Lüderitz basin, which is the orange assets, orange blocks. And then the northern Walvis basin, which is the most active basin now in Namibia. We happen to be the second largest acreage holder in that basin. We also have a significant land package, also a significant amount of 2D data and wells over our acreage, which we have oil show in our well. So as I mentioned before, Tullow Oil has recently farmed in, and Tullow is a very experienced oil finder. They've opened up the basins in Ghana, Uganda, and Kenya all in the past 5 years. So they have a significant understanding of this area to farm into this basin, and strategically in the Walvis Basin, and strategically 100 kilometers south. We also know that Repsol is going to be producing, drilling a well in February/March of this year in the well in pink next to our acres. So very attractive activity happening. Also, we understand that Chariot Oil will be drilling a well potentially in the block in the pink just north of us sometime next year once they find a partner that will farm in. So a lot of activity is still happening in the Walvis Basin, and also other people such as BP and other people in other basins in the Orange and Lüderitz Basin. So a lot of activity happening still in Namibia. Our ultimate goal, next slide, shows the significant amount of data packaged over our blocks. We have the densest amount of 2D data in the Walvis Basin, and we also have 2 wells, one of which was the first actual oil show in Namibia, drilled by Norske Oil in 1994 out in the basin. So a significant amount of data, significant amount of seismic, also well data, and also very rich source rocks in the wells from the analysis by Norske Oil. So quite an attractive block. We are very happy by the block. We are currently about to begin our formal process to farm out the block, and we've already engaged a few people unsolicited, who talking to us about potentially farming into the block. So very attractive package. So we're looking to bring in a strategic partner to help us develop the block as we go forward here. And that's the story for the U.S. and also for our assets in Namibia. The team is the team in Westbridge, and we'll just talk about the corporate team in Westbridge, has significant experience. This slide shows the experience that we've had either in consummating deals, such as helping with the heritage deal, or our board members helping to raise money for Shoreline, UNX, and other companies. Significant amount of transaction history with experience in M&A in Westbridge. UNX was a very significant transaction, which was actually handled by 3 of our current management and board members in Westbridge. So we have experience with a company like UNX, which is an ex-company that had assets in Namibia going forward. The next slide. This talks about our management team, significant experience in our management team, and then also we're very happy to be bringing on board extra technical understanding with respect to our U.S. program through the technical team in the Black Pearl. Currently, that will significantly boost our technical understanding for our operations not only in Namibia, but also in the U.S. as well. So very, very important, very, very strategic. Next slide. Also, this highlights that our board members and some of our board members that I mentioned. Chairman Mark Fruin was involved in the UNX deal. Also, he was the lead counsel to Heritage for the deal in Nigeria. So we have significant experience in Africa. Mr. Henry, Mr. Everingham, who has a Harvard MBA, was also very involved. He actually was the bank that they introduced HRT to UNX and consummated the UNX deal. Has significant experience in Namibia. Mr. Henry is a significant banker. Mr. Larkin, all with significant experience in capital markets. So, and then our chairman Mark Fruin is a very highly respected lawyer, graduated with a degree from Cambridge University in the UK in law. So very experienced, very, very, very respected in the United States, in Canada, and in Europe. Very experienced management team. So currently we are trading about 6 cents. We have 84 million shares outstanding and about 20 million warrants. We'll be doing a private placement right now, trying to raise about $2 million, which we should be closing that transaction in the next 2 to 3 weeks here. And then we will ultimately be doing some rollback, which we announced, and we would be also moving ahead with the structure to merge with Black Pearl going forward over the next 6 months. So we believe that the deal with respect to the capital raise, the consolidation, and then ultimately will create a more nimble company, will allow for a larger volume trading of our shares, and will allow for increase in the share price going forward after consolidation with the activity and the production from the United States. So we think that this will be significantly good for shareholders and increase the value of our shares in the very short term here going forward with all the activity we plan. So thank you for your time. Very exciting story in Westbridge. We have a really attractive position in Namibia, and we are currently working to farm out our acreage to bring in a strategic partner to help us develop it. We are also raising capital to develop near-term immediate production in the United States with a significant growth package in Texas going forward, and we will be hoping to create significant value, for our shareholders going through production, reserves, and ultimately appreciation of our share price through good drilling results in Texas and Louisiana. And thank you for your time, and thank you for investing and being invested in Westbridge.
So thank you, Tozel, for your time. Yeah, Tozel, thank you very much for the impressive presentation. I would like to ask you some more question about it. So maybe to wrap up all the things you said. So far, Westbridge Energy was known for oil and gas projects offshore Namibia. So some time ago, Westbridge announced plans for cooperation with BPH for several US projects. what is the significance of the Namibian projects in relation to the US activities?
Yeah, the deal with Black Pearl will give us diversification of our portfolio, and that's primarily a mandate of the management team. We're very happy with assets in Namibia. However, Namibia is a long-term growth story for the company, and we believe that the joint venture with Black Pearl will help to diversify and bring in production and reserves add in a shorter period of time to the company, and will help to bolster the value of the company by doing that. Also, the production will give us cash flow, which allow us to accelerate potentially our program in Namibia and other parts of the world if we come across new opportunities. The cash flow will help to stabilize our G&A and also help to allow us to do many other projects and other activities in the United States. Also, the reserves added with the Black Pearl and Texas projects will add significant underpinning value, which will translate into an increased value of our shares and which will be good for our shareholders. So the key strategic importance of the Black Pearl transaction is that it allows us to add reserves and production and diversify our portfolio away from just being a pure exploration company to an exploration, development, and production company.
So it is safe to assume that, let's say, 70% of the focus of the company is now in the US and 30% in Namibia?
Well, numbers-wise, we would say that a significant portion of our, about 60-40 is a good number. But we would say, a significant portion of the time and effort will be dedicated towards operations in the United States. However, like I mentioned, we are actively still working on assets in Namibia. We've been gathering data, and we've been putting together a data room, which we will now open to significant new ventures and parties around the world to come to data in the interest of securing a technical and financial partner to assist us to develop the project going forward. So we hope to do that sometime next year, is to bring in a strategic partner to do that.
So as far as I can see it, I think that the merger with Black Pearl is a major step for Westbridge. What are the main benefits for Westbridge, but also for BPH?
Well, for Westbridge, like I mentioned, it helps us to get literally cash flow literally immediately. I mean, our first workover project will in the current producing field of Bivens will allow for production increase of about 300%, which could be completed by end of January, and then another project which will start sometime in that time. Also, in the Warden kind of project, which will increase production again. So the advantage to Black Pearl, to Westbridge of the Black Pearl is it gives us immediate production, and that's immediate. I'm talking about the next 3 months, and that will help to stabilize and give the baseline to our treasury and begin to build our cash reserves. And also, for the advantage of the Black Pearl is that it allows Black Pearl to have access to capital markets as Black Pearl, the privately held U.S. company. It gives the Black Pearl access to capital through Westbridge. It also gives Black Pearl access to the upside potential in Namibia, which is still very significant, as you can see here, with the activity and the attractiveness of people like Tullow and Rexall still having access in the United States. So it gives us production immediately, or very short term, and then or significant production of reserves over the summertime. The advantage to Westbridge.
In the last several months, we saw, let's say, some kind of a trend in the US that major US oil and gas companies are selling their foreign projects to concentrate on local projects in the US. What are the reasons behind this move?
Well, that's a good question. The reason is that the U.S. is, of course, the number one oil consumer in the world. I mean, the U.S. consumes, last time I checked a week ago, consumes about 12 million barrels a day. So a significant market. One, two, the oil price is relatively high for West Texas. We're looking at $96 a barrel at last check yesterday. And also, the U.S. is of course geopolitically stable. Also has a significant amount of equipment and operational capability in country. The wells are low cost and they are fast and on average. And so you have a low cost environment with a high oil price, significant amount of operational capability in country, and a very hungry market, which allows for for smart deals to be done and significant value to be created. So we looked at that and we thought, based on the metrics of the economics on the price we have at BlackRock, that this would be a significant value to our shareholders, and thus the focus of Westbridge and also significant other people like Anadarko, Apache, and other people, of course, in the recent past. I would say reorganizing their portfolios. A lot of them still do have international assets, but the U.S. assets gives them significant production and reserves add in a stable geopolitical environment with high oil price and lots of operational capability. So good arbitrage on some of the products, like especially the liquids. So very attractive to most companies who have the ability to access U.S. assets at this point in time and for the foreseeable future as the world economy continues to recover and the demand for oil continues to remain at 84 million barrels a day. And ultimately, once the world economy recovers fully as we go forward here in the next 2 to 3 to 4 years, we anticipate that the oil price will stabilize or actually increase as we go forward here as demand and the world economy improves. So the U.S. will remain a significant investment location for oil companies around the world going forward over the next 2 to 7 years, we believe.
So what's the impact on the junior markets? So do you expect a further increase in M&A activities?
Yeah, we've seen a significant increase in juniors, especially Canadian juniors, going into the United States and consummating deals. There are a number of other companies that are playing trends like the Bakken in North Dakota and Montana, and even on the other side of the border in Canada, Canadian juniors playing the Bakken trend that way. We've seen a number of Canadian juniors in the Eagle Ford trend in Texas as well. But we don't have a lot of Canadian juniors playing the Wilcox trend, which is the real thing, and because it's a trend that is just coming back into the favor. But we believe, based on the joint venture with BlackRock and the assets we have already, that in the Wilcox and the plan we have for the Wilcox, we believe this will be a significant trend going forward in the next 2 to 5 years. And we believe that actually in the next 7 years, that the Wilcox trend, if exploited and developed, will equal ultimately the production on the Eagle Ford, which currently is at 1.2 million barrels a day currently today. So there are not a significant amount of juniors, Canadian juniors, playing the trends in the U.S. There are a few of them in the Eagle Ford trend, but really not that many, if I don't think any at all, and I may be corrected on that, but they all playing the Wilcox trend in Texas and Louisiana. We will be the first, so we will be the only way for Canadian and international players to access the Wilcox trend from a Canadian company. Very strategic and very important.
Okay, so back to your deal with BPH. So I think it's a great deal. So congratulations for that. Will BPH representatives get a seat on the board of Westbridge, or will be getting to a management team?
Yes, so BlackRock will, we've offered now, before we made the announcement to merge BlackRock, we did the basic joint venture deal that we have right now, which we plan to close in the next 2 to 3 weeks here, we hope, is that BlackRock will be getting a seat in the board. Mr. Looney, who is the president and CEO of BlackRock, will join the board of Westbridge, and we will also be aligning them with about 5 million shares of Westbridge. But ultimately, we plan to, upon consummation of transaction of JV, we plan to merge with BlackRock in the next 180 days. And so ultimately, Michael Looney will join the board and we're planning to add a few more significant people to the board of Westbridge in the future, and also absorb the team from the technical team from BlackRock into Westbridge. And that would be a significant boost to Westbridge's capabilities as a technical company, as an ability to execute and to produce oil and gas and other reserves, which is add significant value to our shareholders and our shares. I'm very excited about that situation occurring.
Yeah, sounds good. So what is the expected time span for starting production on the included projects with Bivens and so on?
Yeah, so Bivens Field, we actually have already started securing, trying to secure rigs, and we have to hopefully plan to start drilling sometime in the new year. We're looking to spud in sometime in January. Not a spud, I mean re-enter the two existing producing wells. We work those wells. Currently, those wells are producing about 50 barrels of oil per day. We plan to go in there and ultimately get the production up to 200 barrels a day from those two single reservoir intervals in each well. Remember that field has 17 paying sands, of which 13 are kind of 12 are proven or have been penetrated and identified, and actually four are possible with the deeper targets. So we plan to go in January, rework, get production up from 50 barrels to 200 barrels a day, then go and drill the second twin well on the Morgan County project, which we anticipate will produce about 400 to 500 barrels of gross production a day. So ultimately, by the end of February, we hope to have production of gross of about 700 barrels a day, of which net to Westbridge at the time will be about 250 barrels. And of course, upon merger with BlackRock, we'll be owning a significant portion of that, about 65 to 70% of that production. About 60% of that production will be ours ultimately sometime in April. And then, of course, we plan to go forward with the Lavaca projects and the other deeper well opinions, which will ultimately push the production by the end of the summer to about 1,500 barrels of oil production a day, net to Westbridge, and ultimately Westbridge and BlackRock after the merger would be about 600 to 700 barrels a day. So quite significant production coming into Westbridge at the time of summertime. That's a significant amount of capital coming into the company, which will allow us to do many things going forward.
Okay, most recently, you announced that Westbridge is amending the equity offering size from 7.5 million to 3 million. But what's the reason behind that, and what is the use of proceeds for those 3 million?
Right. So we initially announced upon the LOI that we were looking to raise up to 7.5. That was to cover the entire program going forward. Well, as we went out into the markets to raise the capital, we were getting some feedback from some of our existing investor-based shareholders, and also internal to management, made the decision to cut it back to 3 because we were getting some interesting offers and structures, potential non-dilutive off-balance sheet type transactions to come into the projects. And so we decided to scale back the financing to be able to close on up to 3 million, and we can close on only 2.5 million to get things going, so we can go in and to produce the oil in the Bivens field and the Morgan County field, and then ultimately consummate some of these unsolicited and some of them solicited offers of non-dilutive or off-balance sheet type transactions, i.e., joint ventures, farm-ins, or in some cases it could be some sort of a debt component, depending through some sort of convertible debenture or other types of transactions. So we're really looking at numerous types of off-balance sheet transactions which will allow us to raise the remaining $6 million to consummate the remaining transaction, and also will allow us to dilute our shareholders less now, which is good for them. So
it's a shareholder-friendly decision. So it's a shareholder-friendly decision.
Yes, that's correct. I think our current shareholders will appreciate.
Do you want to raise more? Do you want to raise more equity in the next 12 months, or is there a possibility to get some kind of a credit line if you can show some cash flow?
Yes, our goal is to make sure that we balance what between equity, if required, and or debt, or farmhouse. We are promising that we will own 100% of our Lavaca project. This is a very attractive project, and we've gotten some interest from people looking to do something on that project specifically. And so we will be pursuing certain, like we said, non-dilutive transactions for that project going forward here to help move that project forward as well. So luckily we have the two baseline projects that have proven reserves that add a baseline value and will give us production and cash flow, and then we can really try and create significant value from the Lavaca project through non-dilutive off-balance type transactions. We'll be looking to do something to raise capital here, but we haven't decided on if we're going to do a private placement or through an equity financing or debt type financing. We'll know that in the near future.
So what are the most important milestones for Westbridge within the next 6 to 9 months?
For the next 6 to 9 months, we would say the most important milestones is, well, one, closing the transaction with BlackRock. So that includes closing the private placement and closing the joint venture LOI transaction between now and the end of this year. That's the goal. Those two. Two would be to begin the operations on the two main proven projects. So the two workers and the Wharton County project is to execute on those, deliver as we say between now and the end of February on the budget and on time, and hopefully either meet target production numbers or surpass those numbers. Then the third thing is that sometime in the fall, in the latter part of the first quarter of this year, we secure some sort of financing and preferentially some sort of non-dilutive or off-balance type of transaction to consummate the remaining part of our work program for the projects and to add significant reserves and production. And then 4 would be consummate the merger with BlackRock before May 30th of this year. And 5, hopefully by the summertime, be able to come back to our shareholders with good news, saying that we are currently producing net to Westbridge of greater than 6,700 barrels a day, and we've added, greater than 4 million barrels of reserves, or 5 million barrels of reserves to our reserve base, and also that we farmed down our acreage in Namibia. We brought in a strategic partner to help us develop the asset or to move the asset work program forward. So those are the top, I would say 5. I know that's a lot, but 1 is to close the transaction of BlackRock, secure the financing. Those are 2. 1. 2 is to execute on the immediate program on the first 2 proven assets. 3, secure financing to consummate the remaining program. 4, consummate a merger of BlackRock. 5, execute on the program as described, on the budget, on time, as per most of production and reserves. And 6 is to secure and to move ahead our projects in Namibia, farming down our significant equity position and bringing in a strategic partner or some other form of transaction which will move ahead the work program in Namibia. So those are our 6 top things over the next 10 months. So we're going to be very busy, but we believe that will add significant value to our shareholders going forward.
So it sounds that your shareholders and interested parties will look at a, I think, pretty strong news flow in the next couple of months.
That's exactly correct. We'll be having significant amount of operational updates, hopefully really good news on our reserves and production numbers, and also good news from hopefully Namibia's worked up so well in Namibia, which will be next to us in February, March. and then activity from Tullow and other people in Namibia, as well as maybe a farm down in Africa. So a lot of news and a lot of activity.
Which companies do you see as your peer group, and where do you see the fair value of Westbridge compared to the actual market cap?
Well, currently now before we could consummate the transaction in the U.S., our peers are people like Oil and Gas, which is also in Namibia, and a few other Namibian players. In Canadian companies in Namibia, but our number one peer would be someone like Oil and Gas, who's also publicly traded in the U.S. And in Canada. With respect to once we start to do the operations in the U.S., we will definitely be very different from those original people in Namibia, because we will have U.S. production and reserves add. So our peer group will change a little bit because of that. And but our peers are people that are listed in Canada. I don't want to mention some of their names, but they're trading at significant multiples to where Westbridge is now, and which is fine because we have production. But upon consummation of these activities, I anticipate that our share price will be significantly higher than where it is pre-consolidation. So post-consolidation, of course, will be reflective of the consolidation number. But we should be, based on the activity by the end of summer, we should be significantly higher than where we are today. I mean, think about it this way. Currently, we have no production, no reserves. We have really good assets in Namibia, but they're exploration assets, which we love them, and we will create significant value from them in the near future. But we're very excited about this opportunity with Black Pearl and the merger of Black Pearl, because what it does for us is it gives us production, and hopefully by the end of the summer, of about 600 to 700 barrels a day, and about 4 to 5 million barrels of reserves back to Westbridge. That's a significant deviation from where we are today, but a very significant positive deviation, which should be reflected very, very nicely in appreciation of our share price going forward. Also with the structural change in our company, which will allow for much more activity in the stock, and also with the consummation, coupled with the activity that we're going to be announcing over the next 12 months of activity, bring a lot of attention to our company, which will of course be reflected in our share price going forward. So we're very excited about the projects, and we think there will be significant for our existing shareholders and any new shareholders that come into the stock. And they're coming in a very attractive position right now, very attractive that will be in literally 10 months.
Okay. Last but not least, I would like to have a look at the Namibian projects once again, and was wondering what's happened in the last several months, because the Brazilian company HRT, that's the company I think right next to you, announced some dry holes that had not only a negative impact on the share price of HRT, but all other companies in the area. Can you explain to us what really happened there and how you see the further development of this area?
Yeah, we only know, well, we can only say what we know based on news releases, but what we do know is that you're right to actually drill 3 wells, 2 of them in the Walvis Basin, over in the acreage south of ours, and then 1 well in the Orange Basin. The 2 wells were complete dry holes. The 3rd well was what we would call in the oil business a technical discovery, and based on the news release and analysis of some of the work that's public that we've looked at with HRT, that they were able to penetrate source rocks which are generating hydrocarbons today, and they were able to recover hydrocarbons from embedded sands above and in between the 2 major source rocks. So they recovered light sweet crude of 38 to 42 API, which is very light sweet crude, equals to almost as good as Nigerian crude, actually, crude from Texas. So this is very high quality crude, which means that the source rocks in the Walvis Basin are thick, they are high in organic content, and they are currently and have been generating hydrocarbons for the past at least 3 to 5 million years. So a significant technical discovery, which basically proves that the Walvis Basin is the oil basin in Namibia. We know as you go deeper into to the south in Namibia, the basin regionally dips and gets deeper, and then the salt trucks get deeper and becomes more gassy. So this, the Walvis has now been proven to be the oil-prone basin. And the advantage to us in Westbridge is that we can uptake regionally of these shales. And so the key is to identify the traps and the reservoir. And just to give a context, Namibia has only 17 wells, of which I think my understanding is 7 wells were drilled in the Kudu gas field in the south. So you only have about 10 wells in the past 20 years that have been drilled in Namibia, of which now you have 2 oil shows in those 10 wells, which is good. But keep in mind that Namibia is 80% the size of the U.S. Gulf of Mexico. So it's about 1.5 times the size of the North Sea. So it's a significantly large area. For example, it took 37 penetrations in the deep water Gulf of Mexico before there was a commercial discovery. It took 56 penetrations in the Niger Delta before the Niger Delta had the first commercial discovery. Right? It took about 33 wells in the North Sea before there was a commercial discovery. So we've already found hydrocarbons, at least, and we've recovered oil in the Walvis Basin in Namibia in the first 10 wells that are non-Kudu wells. So on Kudu wells and the proven gas field. So the system has and is generating hydrocarbons. The key now is to identify where the traps and the reservoirs are. And I think as we have people like Tullow come in, who have done a good job in Ghana, in Kenya, and Uganda, that this will prove to be favorable. And also people like Repsol, who have done success in Brazil across the Atlantic Ocean. So very encouraged. Yes, there's been some disappointments, but we need to keep in mind that this area is extremely prolific, very rich source rocks. We are currently generating hydrocarbons and have generated hydrocarbons for millions of years. We are up dip from that location, which means our migration is towards our area for those hydrocarbons. And that's why we think that people like Tullow and Repsol farmed in to this area and are going to be looking for hydrocarbons very close to our area in the very near term. So very attractive, despite of the disappointments on HRT.
Okay, so we're looking forward to the developments in the next year in that area. I was wondering how your strategic relationship in Nigeria is going, because you wanted to acquire and develop near-term production and exploration assets over there, or did you drop that idea because of the black pearl opportunity?
Well, that's a good question. We looked at many opportunities in Nigeria, and we still have that strategic agreement with Nigeria Oil and Gas. We, however, looked at a lot of opportunities, and what we came to find was that the cost of entry was extremely high, and we weren't finding the right assets that we liked. So we decided to broaden our look. We were looking strategically for proven near-term production to balance our portfolio in Namibia. And so we started to broaden our portfolio, and we came across the U.S. assets through a very, very deep relationship between one of our directors and the Black Pearl team. And that's how that relationship was created. Also because the U.S. had such attractive metrics. Now, the agreement with the Oil and Gas Nigeria is still valid. We have recently been informed by the gas that the Nigerian government has announced the marginal field program, which is a very attractive field program, which basically is that local Nigerian companies can apply for marginal fields, which are basically fields with between 5 to 50 million pounds at a very minimal cost, and which have rich infrastructure and require low cost wells. So we'll be looking at that but our major effort over the next year will be the United States and Namibia. But we will continue to look at new opportunities that come across anywhere in the world. But Nigeria will be, we would say, our plan C or D. But our main plan A is Namibia farm down, building a strategic partner, and the U.S. assets. Keep in mind that our cash flow from our U.S. assets will allow us to have cash flow to look at things like Nigeria and other parts of the world over time, over the next 12 to 10 to 24 months. But we will be focusing a lot of our efforts on the U.S. and Namibia in the first 12 months and next 12 months.
So that was very interesting presentation, and I think your company is quite heavily undervalued at the moment. I'm looking forward that you are executing your business plan, and there should be, I think, a strong growth in the company, and shareholders will hopefully benefit from that.
Well, thank you very much for your questions and your time. I really appreciate. I'm very happy to continue to communicate with all my shareholders and all our shareholders in Germany. And I would like to say danke, and I hope that everyone has a great week going forward. Thank you again for your questions and your interest in Westbridge, and we hope that we will have some more new shareholders from Germany, and hopefully next year we will do some sort of a mini investor roadshow in Germany to update our German shareholders on what's going to happen in our U.S. assets and also our assets in the Namibia.